Hello everyone, welcome back to Crypto Cash. Thank you very much for joining me here today. We're taking a look at VTHO, which is VTHOR token, and bear in mind this is your one-stop shop for cryptocurrency analysis, among other things. In other words, we don't look at the fundamentals, we strictly look at the technicals in these videos to ensure that you understand best practice and good entry point for taking a position in this volatile market we're in. I'm not a financial advisor, this is for educational purposes only. Always do your own research. And if you're interested in joining my Patreon community, which is who actually requested I cover this here today, link in the description below, show your support. Also have a link to my Telegram community, among other things. So go ahead and reference that on your own time. But for now, without further ado, let's go ahead and check it out. All right, folks, let's go ahead and take a look at VTHO. And before we do, I always like to look at Bitcoin and Ethereum first, just get a quick baseline on the market, see what's going on so we understand the big picture and how that's impacting the altcoins that we readily look at and invest in, right? So let's take a look at that here first. So taking a look at Bitcoin, this is where we're at here. So I marked this line earlier in one of my previous reviews, and this is essentially a previous support and resistance level. So we are above 38,750. Price is testing that level right now, so let's see what happens. But what's interesting is this 50-day moving average it's coming down, was tested and rejected. In other words, it did not pass the 50-day moving average. So what I'm expecting will happen, it'll work itself into this little channel and bounce up and continue upwards. Again, as long as we can continue this little bullish momentum that is happening right now. So just be mindful of that. We'll see what happens. We might lose this support, come down, and then bounce up and eventually increase over the 50-day moving average, but just know that's kind of holding the price down from coming up a little further. And it's not a problem at all, honestly, because it's allowing everything to calm down a little bit and then ramp up again, hopefully again soon. We like bull runs that actually have short breaks in between them. But that's Bitcoin. Again, this is actually Binance. I apologize, I forgot to mention that. This is a Binance desktop application, and I use TradingView within to get this chart here. And this is, again, the 4-hour chart. And I have the 50 and the 200-day moving averages enabled. Those are the charts that the industry leaders are using. Okay? So just be mindful of that. Moving on to Ethereum. Almost a carbon copy of Bitcoin, minus obviously the major increase previously where Bitcoin is actually selling off. But traditionally, Ethereum is the go-to standard for those who are selling their Bitcoin. And we haven't seen that recently. It hasn't really been a popular altcoin, so to speak, with the price coming down as hard as it has. It's essentially mirroring Bitcoin. So we see the 50-day moving average coming into play, as well as the essential death cross they refer to it as, with the 50-day moving average coming down and essentially intersecting with the 200-day moving average. So it's got some room for growth, of course. We've got a lot of potential improvement, but at this point, we'll just kind of see what happens. We've hit kind of a resistance based on Bitcoin hitting that 50-day moving average. All right, let's go ahead and take a look at VTHO. I apologize, I got some numbers up here. Let me go ahead and clear those out really quick. And what we're going to do is we just look at the one-day chart first, right? And the one-day chart is helpful because it really helps us understand really just big picture, right? Because I'm all about understanding, bird's eye view and then going to a cellular level. And this really just helps us understand the progression, right? So if we look at this, obviously we had a few significant ramps up where the RSI goes way over 70, eventually calms down, consolidates, up over 70, consolidates, and tries to increase again. It would have done very well here if it wasn't for Bitcoin selling off. Right there on the 17th was the first major Bitcoin sell-off last month, okay? So that's when all this crap started, so to speak. It comes down, tried to recover. That's the 22nd. That was the second major decrease. We saw it come all the way down to 0.0011, and it came back up 0.02, and it's been on a downward spiral since, which is essentially the same thing as Bitcoin. So I like to show this to you because Bitcoin is essentially a catalyst for most all of the altcoins, and looks like VTHO has a tendency of kind of following suit. It does go in its bull runs, but they're usually if Bitcoin is in a state of consolidation, not in a consistent sell-off stage, right? So just be mindful of that. That is the one-day chart. No increase in volume, almost pretty linear at this point. Not a lot going on. RSI is low, so just note that as well. Low RSI on the one-day chart tells us the overall sentiment is extremely bearish. Even though it's bullish today, the MACD hasn't had a chance to swing back upwards, so to speak. So that's just kind of the situation. Looking at the 4-hour chart, Just note I have a previous resistance level here at 0.012. That will essentially work as a resistance moving forward. It'll probably be a potential resistance in the next couple of days, depending on how the price action continues. But also see here, again, this is a pretty common trend. The 50-day moving average is working as a resistance. It may break through if Bitcoin can increase up to about 40,000. We might see that happen. Furthermore, we've got what? RSI is right in the center. So neither good nor bad. That's oversold nor overbought. Honestly, not really much to understand there, except for the fact that it is still a good potential entry point based on the potential for VTHO and how well it's done in the past. So again, this is all contingent on Bitcoin, but if Bitcoin can continue to, work itself sideways and just increase marginally, then we'll see VTHO likely take off. MACD does imply that we have bullish momentum, which makes sense. Just understand that. And then moving on to the 15-minute chart, I always like to, first of all, enable the moving averages. Correction, I like to enable the VWAP and disable my simple moving averages. And then, of course, always have the EMA line on as well, because smaller time frames, you want to use the VWAP and the EMA. Okay, so the moving averages, the simple moving averages are beneficial on larger time frames, whereas smaller time frames, to find a good entry point, you want to use the exponential moving average. I use the EMA 15 and the volume weighted average price. So if you're new to my channel, VWAP is my best friend. It should be yours as well. VWAP is a volume weighted average price. What does it? It expresses the volume in the last 24 hours as a price. So right now, the volume tells us the price should be at 0.0095. Currently, the price is above. It's trending towards 1 cent. So it's just, there's a slight variance there, which is good. That's okay. We want to be above because it works as a support and resistance level. The EMA line is an exponential moving average, and just to kind of give you an example, if you look at this previous bull run here, you can see how the price comes up, tries to consolidate and sell off, and it gets rejected. In other words, it holds and it can continue to go up. So if the price is consistently bouncing off the EMA line and staying above, that shows it's a bullish momentum, bullish trend. This is a fantastic thing. Also bear in mind too, trends are your friend, right? You might have heard that before, and it's true. They're literally the only friend you can have in this market sometimes. So paying attention to these trends and identifying once a trend starts is a really good thing. And the EMA line really helps you understand if a trend is continuing because the price stays above, right? But the difference here is that when the price got too high away from the volume weighted average price, in other words, the price was way far away from what the price should be, then that happens to occur in a retracement. What I mean by that here is if you look at this difference from the volume weighted average price upwards to the top of the price action at this time, right before it retraced, it was at 31%. So the price was 31% higher than what the actual volume is reflecting as a price should be. That being said, anytime you see that go that high, and in combination you see the RSI over 70, that's a firm indication to consider trimming your position. Or if you're in a very long position you're holding for months or years, don't worry about it, obviously. But if you are doing a short-term swing trade or a day trade, you want to pay attention to this because that will help you, get out before the price plummets. Thankfully, this is still a bull run and the price didn't come down super far. It just continued to consolidate, and we might see it test this resistance level again a fourth time? Okay, it'll be a third time. But what I'm getting at here is that pay attention to the variance between the VWAP and the price action. If it gets too high and it's like obviously overextended, you might want to pay close attention to that and then look at the RSI. Okay. And the last thing I want to note here is the 1 minute chart rather. From the 15. So we're going to look at the 1 minute chart here. What I want to do is kind of just provide an example of how to find a good entry point. So again, we got the volume weighted average price down here, and the price came way high. So again, take a look at this variance. Look at how high that is. That's almost 8% in this little gap here. It's not terrible. Don't get me wrong. 8% is a lot lower than the 30% we saw earlier, right? But it's still very relevant because as you see, the price comes up so high so fast, it has to come back down at least somewhat. Good price action on a good bull run has a slight increase, consolidation, slight increase, consolidation. We just see that it looks like a staircase. That's the best type of increase. These are the ones you want to be concerned about because they oftentimes retrace because the price got too high too fast. What happened is the industry leaders are pushing the price up to about this point right here. And then the rest of us FOMO in to drive the price even higher. And then they sell off at this point here when we're left off hoping for the price to come back up, and it keeps coming down. That's usually what happens when you see something like this happen. They're on the winning side, and we're on the losing side. So it's important to identify what they're doing and to try to be one step ahead of them. And the best way to do that is to use the EMA line, right? And that's the exponential moving average. I use the 15, EMA 15, and that basically just tells us the momentum, right? So if we look back here, first of all, the price is kind of jumping around. This is a consolidation phase. That's pretty standard. But once you start seeing kind of, the prices get a little higher, right? Consolidation, a little bit higher highs, and it's a consideration to take entry there. Now let me zoom in here and give you an example of what I mean by good entry and consolidation. So to essentially find a good entry point here, first of all, what we want to do is we want to look for 2 or 3 solid green bars above the EMA and the VWAP line. Okay. So good news is the price action is staying above the VWAP. That's fantastic because it's working as a support level. All right. So check number 1, check that off. Second thing is the EMA line. Now in this consolidation phase, it's hard to identify 2 to 3 solid green bars above EMA. I mean, you could see some right here, you can see some right there, but the best ones to look for are the ones that are bouncing. In other words, when the price comes up and bounces off the EMA line, for example, right here, you can see the price comes up, bounces off EMA, and continues upwards. That's a good sign. So this might be a consideration for an entry. Another one that's really good is right here where you can see it's obviously above the EMA. That's another good consideration for entry. Okay. So that being said, if you're looking at that here, if you were to take entry at this point, right here or right here, you'd be sitting pretty good because the fact that price came all the way up here to the top, right? Now you don't know it's going to come up there that fast, but when you see a price action like this and it continues above and stays above the EMA line, that would be an awesome time to take entry. So let's just say hypothetically you took entry right here, right? At this point right here, right around 0.0096. Now what a normal person would do, a normal trader would do, is they'll look at the RSI, be like, okay, it's over 70. I might want to consider exiting my position. Not good, not ideal, not the best way to go. It's not terrible, don't get me wrong. If you got a really good entry point way back here, then that might be advantageous because then you'd get out before it comes back down, right? But that's not always true. So if we look at this here, we look at this price action, right at this point where RSI comes up over 70 is essentially right in this range here, okay? So had you got out right as soon as the RSI got over 70, you'd be at like a 2% gain, which isn't bad, by the way. 2% on a day trade is awesome. I love that. I work for 2 to 5% daily. However, when we look at the price action here and how high it went, you don't want to get out that early. What you want to do is you want to get out when the RSI starts to taper off. So when you see the RSI starting to come back down, right in this range here, that's when you want to get out. Again, easier said than done because this is after the fact. But I just know that anytime you see the RSI come over 70, you don't necessarily have to sell your position right away. It's advantageous to consider waiting until it starts to fall back down and come back down closer to that 70 mark. Okay, so we take the percent here and we look at this. That's a 5.6% increase. That is what, 2.5 times the value, right? You're getting 2.5 times the return because you didn't get out prematurely and you got out when the RSI started to correct itself and come back down. Okay. Again, it doesn't always work out this way, but more often than not, you use the EMA line to identify a good entry point. Price is staying above and it bounces a couple of times. Take entry. Furthermore, wait until the price comes up and wait for the RSI to come back down. That's a better time to take entry. Another thing I forgot to mention too is that you want to use good risk tolerance, right? So you would want to set a stop limit at, just say 1% down here in case the price comes down, you get stopped out. Let that happen. However, you always want to shoot for a 2-to-1 ratio, so you want to shoot for a 2% increase. So in this scenario here, had the price come back down by 1% and you stopped out, that happens sometimes. You would have been safer though because you didn't risk your entire amount. But if you got in there, had a stop limit, and the price continues up and you hit your 2, almost 5%, that becomes a 2-to-1, 5-to-1 return. And you want to have that on your risk tolerance. You want to have a specific tolerance of how much you are willing to lose per trade and how much you're willing to try to gain. You can't have it be 10-to-1 at all times, right? It never works out that way. You want to be conservative with a 2-to-1 ratio at first. If it goes above 2%, you're looking really good. You're looking awesome. Again, those are just things that keep me successful as a day trader because I personally I have a small risk tolerance and I don't like losing. So yes, it's true, I might not gain as much, but I also don't lose as much either. Okay. But it keeps me profitable at the end of the day. So by all means, just make sure when you're doing these things, don't take a full position. If you've got $1,000 to trade with, only start with 200 to 300, add to your position as you get closer to your goal. It's much better to do that than it is to just go all in and all out and just lose those large chunks of change, right? Again, easier said than done, but it can be done with practice and patience. All right, and that's hopefully my goal here, is to continue to educate you on best practice. So if you found benefit from this, please like and subscribe. If you are considering learning more about cryptocurrency, technical analysis, these things here, feel free to reach out to my Patreon account, as well as my I also have a Telegram community too, that we all just stay open, communicate, and it really works out very well. So feel free to join on along if you'd like. Otherwise, hope you have a good rest of your day. We'll see you perhaps the next time. Have a great rest of your day. Thank you.